Something massive is happening in the world of crypto. And no, it's not just another price rally. We're talking about a fundamental change, a great shift, where big institutional money is moving in and completely rewriting the rules of the game. So today, we're going to break down how this is all happening and what it really means.
And just to get a sense of the scale we're dealing with, look at this number. The total value of the entire crypto market, according to CoinGecko, just smashed through $4 trillion. That's a brand new all-time record. This isn't just a ripple, it's a tidal wave, and it's being led by the original giant of the space,
And of course, that's Bitcoin. It recently shot up to over $122,000, putting it just a hair, 1%, away from its all-time high. It feels like after weeks of just sitting there, the king is finally ready to claim a new peak. But here's the thing, it's not doing it alone.
right there alongside it is Ethereum, which has been on its own tear, rallying to over $4,300. So you've got these two titans leading the charge. But as we're about to see, they're kind of marching to the beat of two very different, but equally powerful drums.
So let's start with Bitcoin. What on earth is fueling this incredible run? Well, the answer is pretty simple, and it's one word: institutions. The biggest financial players in the world, they're not just dipping their toes in anymore. They are jumping in headfirst.
And you can see this happening in three key ways. First, those new Bitcoin ETFs, they sucked in a staggering $773 million in just 3 trading days. Then, get this, the White House signaled it's looking into letting people add crypto to their 401ks. That could unlock a pool of money worth $9 trillion. And all the while, big companies just keep adding more and more Bitcoin to their own balance sheets.
And if you want to know the mindset behind that corporate buying, look no further than Michael Saylor, the founder of MicroStrategy. His company holds billions in Bitcoin. He literally said, if you don't stop buying Bitcoin, you won't stop making money. I mean, that's about as bullish as it gets, right? It's not just optimism. It's practically a corporate mantra at this point.
Okay, so while Bitcoin is having its big institutional moment, Ethereum is making a completely different kind of power play. Its rally is being driven by a whole different set of factors, and it really shows you its unique role in this new digital world.
And to put its growth in perspective, just check this out. Ethereum's market cap recently hit $523 billion. That means it actually flipped MasterCard. I mean, just let that sink in for a second. A decentralized world computer is now worth more than one of the biggest payment giants on the planet.
A huge part of that surge came from one incredible move. On-chain analysts spotted this mystery whale. It's almost certainly an institution. And over just 1 week, they quietly snapped up nearly $1 billion worth of Ether. And they did it using 6 different wallets, trying to fly under the radar. This is exactly what big money accumulation looks like in the wild.
But for these institutions, it's not just about the price. It's about what Ethereum fundamentally is. One of its co-founders, Joe Lubin, calls it trustware. Think of it like a global system for creating trust without needing a bank or a lawyer in the middle. It's the engine for what people are calling Web3. So institutions aren't just buying a coin, they're buying a piece of what could be the future's economic plumbing. Okay, so all of this new, serious money pouring in raises the biggest question in crypto right now, and it has everyone divided. Has this institutional flood finally broken Bitcoin's predictable 4-year cycle? That boom and bust pattern that's always been tied to its halving events?
You've got two camps here. On one side, you have people like Matthew Haugen from Bitwise who are saying, yes, the cycle is dead. They argue that with ETFs and all this institutional demand, it's a whole new ballgame. But on the other side, you've got skeptics like the analyst CryptoBurb and Zapobank CEO who say, not so fast. They argue that the cycle is baked into Bitcoin's code and that even the institutions operate on their own financial cycles that happen to line.
But whether the cycle is broken or not, one thing is becoming crystal clear. This whole crypto thing isn't just for traders on screens anymore. It's leaking out into the real world and becoming part of our actual daily lives.
And you can see the proof everywhere. The convenience store chain Sheets, with over 700 stores, is now taking Bitcoin. The Singapore exchange is gearing up to offer crypto futures to its big money clients. It all points to what one venture capitalist called a new financial era, where billions of people eventually use blockchain. The bottom line is it's going mainstream fast.
Which brings us to the ultimate question. With all this institutional money flooding in, and with crypto showing up on Main Street, what are we actually watching here? Is this the birth of a brand new financial system? Or are we just getting a front-row seat to the peak of the biggest, most spectacular bubble in history? I guess only time will tell. Thanks for tuning in to The Explainer.